Afternoon, ladies and gentlemen. I would like to welcome you all to our sixth edition of our Stock Talk webinar series. And during today's session, we'll be looking at how to navigate the stock market during elections. That is the topic for the day. So we will take you through what we think about the market and what kind of scenarios we are looking at, and what the most probable investment opportunities are at this moment of time. How this will go is there are two sections for the webinar. Firstly, we will take you through a presentation, and secondly, we will have a Q&A session. Uh, if any of the investors have a question, you can basically post your question onto the Q&A section in this Zoom. So at the Q&A section, we will be taking up the questions one by one. So in addition to that, I would like to add that this webinar will take place in hybrid languages, English and Sinhala. So on behalf of some of our viewers in Sinhala medium as well, some of the questions will be answering in Sinhala. So you can post your questions either in English or in Sinhala. So with that, let me straight away get into the presentation. Starting off, let's look at how the timeline is at the moment. So we always have a expected timeline as to how things would turn out. So far, this is how things have turned out. The blue color tabs are the ones that has been completed. So we've had the second review and third tranche coming in. We've had the bondholder negotiations getting completed in July, and then we've had the in line with our expectations, the presidential election, and then ADR being confirmed by the IMF. So following that, what is pending on our plate? So from research side, we were expecting the general election to take place during the period of December to February. So what we see is an advancement from there. So we are having the general election now in November. And then following that, what we'll have is the third tranche of the IMF, broadly in line with our expectations. And we are expecting the fourth tranche of the IMF after board approval to come in December. So possibly if things get delayed, maybe it can push off to January as well. However, we think there's a high likelihood of it getting completed in December. In terms of the implementation of the external debt restructuring, so we are already in the process of implementation. So there's a high likelihood of that again happening or completing around the November to December period. So in late November, early December. So I think even the governor said that we are likely to complete it over the next 3 to 4 weeks. So immediately after the external debt restructuring, we are expecting the rating upgrade to happen. So with that, things are likely to be very clear and more positive. And then towards March of next year, again, we have the fourth review again coming in. And then finally, with it, you'll have the provincial or local government elections. So that also, of course, there is a possibility of some amount of advancement. So you may see during the February-March period, potentially either the local government and the or the provincial government elections happening, and then either one happening in the month of June as well. So within that period, as we explained in a media review last September, within a 1 year period from there, we are likely to see all elections getting completed. So something I would like to mention is also that uh, the new next budget is likely to happen during possibly late January. So that will be also something that investors needs to be taken into account. So this is what we expect in terms of quarterly earnings. So we are expecting a recovery in quarterly earnings. So if you say take year on year compared to first quarter 2023, the first quarter 2024, we've seen a significant rise in earnings. Similar trend we've seen from the second quarter 2023 to second quarter 2024. So now we are likely to see the third quarter results. So we are unlikely to see same level of growth rates happening. But however, we are expecting to continue to see some strong growth rates to happen. So overall for the year, we are looking at a 42% growth of corporate earnings, and for 2025, slightly slower than that, 17% growth in corporate earnings is what we are looking at. So this is how the market has moved so far. So we've broadly come up to, in terms of the SPI is still trading at a significant discount to the market. So we think that there's a lot of upward potential to be plugged in. So basically, this graph needs to get updated for 2 weeks. So we've seen a significant rise in the market over the last 2 weeks as well. So now we are broadly closer to the 8 times mark as well. So in terms of the CSE, you can see that the CSE is still one of the more attractive markets in the region. Of course, compared to the Vietnam market, now we've seen a sizable improvement in the market compared to the Dhaka market and the Pakistan market. So we've had some kind of improvement over the last 6 months to 1 year period. So these are the primary reasons why we think the market is going to re-rate. On one side, it's going to be the corporate earnings, which is likely to surge by 42% during this year and 17% next year. Then something important is that they are one of the cheapest markets in the region. And so there is potential for our market to move up to a historical average of 12 times PE. And then uncertainties. So one uncertainty that has been hovering is the EDR uncertainty, but that is not the only uncertainty that's there in the picture. We have the political uncertainty also that is important to look at. So with that, what happens is we're having the general elections on the 14th of November, and we feel that there's a high likelihood of the ruling party, which is the NPP, securing majority in parliament in line with the historical trend that we have seen similar to the past elections. So also with this, there is a support of the weak opposition that is there as well. So with that, we feel that there's a high likelihood of the ruling party securing majority. So with that, another level of uncertainty is likely to get solved. Then external debt restructuring will get solved. The rating upgrade is likely to happen. Once the rating upgrade happens, the biggest problem we had for the barrier that was there for foreigners to come and invest here will be gone. So with that, you will see foreign inflows coming in into the equity and debt markets. So that will solve a lot of issues. Then you have the uncertainty related to the IMF. We think that will also get solved without an issue with because we've met most of the targets that are required, and especially the completion of the external debt restructuring will lay heavily on this time's review. In addition to that, the securing of the fourth tranche of the IMF. So together with that, you will see the ADB and the World Bank funding also coming in for budgetary support. So overall, we think a lot of uncertainties are likely to get solved, which creates a climate that is very good for investments. That's why we are on a very bullish mode in terms of the equity market. So next is in terms of our target. What is our target? SPI, our mid target is 13,500 for 2024. And then we have extended target of 15,000 for 2025. However, we feel that considering the current bullishness of the market, this is likely to get hit during the first half of the next year first half of next year, because that will be the best climate uh, for a bull run in the market, because you will have interest rates also bottoming out around that area. So you will have a significant bull run coming in with heavy retail participation around the December-January period. So now also we are seeing a starting point towards that, but we think it will get further accelerated towards the month of December. So 15,000, remember 15,000 is going to be our target for the ASPI. If you want a range, it's more or less somewhere in the range of 14,500 to 15,500. So 1,000 index point range is what we are targeting. So that's broadly, we feel the fair value for the market. Beyond that, you may want to look at to gradually look at reducing exposure. Of course, we will look at reviewing our targets if the earnings that are coming out is much better than our anticipation. But for now, we think these targets are the range that the target ASP or the equity market is likely to get hit. So yeah, let's look at some of the scenarios that can happen. So these scenarios are applicable for all 5 years, but for now, we'll look at 4 scenarios that are applicable for the next, let's say, next 1 year period. So the first line out of these 4 scenarios is to identify what kind of a political climate that we'll have. So base case one is more or less like a hung parliament and difficulty in taking drastic decisions, and a scenario where IMF program is barely on pause, and you have the governance related reforms being implemented and keeping the IMF program on course. But something, a similar period, let's say to first half of this year, where you have some amount of uncertainties, but you have some growth also coming into the picture. However, if you do not have sufficient reforms or broad basing of taxation, you may have to go into some kind of tax hikes as well. So in this kind of a scenario, we think interest rates are likely to be around the 10 to 12% mark, gradual GDP growth, slow alternative investment options, and slow rise in the stock market. Scenario two, which is our monorail dream, this is a much more stronger parliament is what we are looking at. IMF program is implemented on an accelerated basis, or basically you could say broadly on time rather than continuous delays. Because if you look at last December or even June targets, you know that there were continuous delays in trying and implementing some of the conditions, and we got the tranches 3 to 4 months in delay, and there was a lot of uncertainties that came in. So this is a scenario where none of that is there. On time delivery and some of the digitalizations take place, digital IDs coming in, with some government institutions getting digitalized, and with it there will be some amount of financial literacy that comes in. So this helps for interest rates to decline further. We are looking at 8 to 10% range. There'll be a strong search for alternative investment options. We are looking at a strong rise in equity market, and in such a situation, there's be a lot of IPOs and M&A. So before going into the next two scenarios, I will go into the probabilities. So these are the probabilities that we were anticipating as at September. So 50% probability for scenario one, that is where you have some amount of uncertainties and slowness in terms of growth. Then you have 30% scenario coming in for the monorail dream. So the next two scenarios are the super grade highway and the Lankan pothole. So these two are extreme scenarios where you have a very capitalistic environment and a fully digitalized environment where you have a further decline in fiscal deficit, bringing lower borrowing requirement and a reduced interest rate environment. And on the other side, you have a very weak scenario immediately leaned into a fall of the IMF program, rise in inflation, currency depreciation, and tax hikes, and so on. So in that kind of a scenario, you see a massive spike initially, 15 to 20%, then rates moving further, possible second debt restructuring also likely to happen. So I won't rule out any of these scenarios. So in terms of year one for the new government, I would say our majority case was scenario one, but now it seems to be more and more apparent that there is a likelihood for a strong government. So with that, you may want to consider that we may go into scenario two. That is something that you may be already experiencing in terms of a potential decline in interest rates and also a rise in the equity market. So you will potentially experience this over the next 3 to 4 months or over the next 6 months period. And with that, we will, if that is the case, then we will experience a very strong attitude in terms of equity markets. So our 15,000 target is likely to be hit sooner rather than later. However, so how do you take the scenarios beyond the first year? So as I said, these scenarios and can change anytime from one scenario to the other scenario. What makes the difference? The difference is made from the budget. Now, how much of a budget deficit is there, and can the existing government implement reforms related to state-owned enterprises, digitalization? Can the government implement reduction in fiscal deficit? So there's more likelihood than not that the first year is likely to be great, and then what we need to monitor is what is the government, what kind of reforms is the government capable of implementing in terms of reforms during 2025. Now that and the budget for 2025, that is November 2025 budget, and the reforms they are implementing during the year will determine what kind of a scenario will be applicable for 2026. So that is how you should take this approach. So for now, I feel that rather than scenario 1, we may be moving into scenario 2, contrary to our initial expectation that we put out during the mid-year outlook. Yes. So that comes to the end of our presentation. And so I would like to highlight to investors again that you can post any of your questions either in Sinhala or in English in the Q&A section in this Zoom. So we are ready to take any of the questions. So Nishantha Mudalige, one of our senior investment advisors, will be joining me for the Q&A session, which we are going to start now. So let's move into the questions straight away. So let me take you through some of the questions that we have already got. And I will start off with posting a question to Nishantha. And so this will be in English, and later we'll move it to some of the Sinhala questions as well. So Nishantha, if I post a question in this way, I think we all know that we're going to face a election on the 14th of November, and a lot of investors have this uncertainty regarding how we should tackle this situation. So sometimes it's not only the election as well, there's a lot of other uncertainties as well. So let's look at the question like this. What kind of strategies, Nishanta, can investors look at? If you take this volatility in the market in relation to the election outcomes, then you have the fiscal tightening that needs to be done. Then even in the geopolitical side, there is a lot of challenges. So uh, can you explain to us what kind of strategies should investors adopt? Nishant?
Good evening. Dimantha, I'm audible, right?
Yes, yes, you're audible.
Okay. In terms of if you look at the geopolitical structure, recently we saw parallelly to Sri Lanka, of course, US also went for the election, and for the second term has won the election, and he came out with a very strong political campaign that he's trying to make US number one again. So if you look at in that aspect, of course, previously in terms of Trump's administration and his principle and his groundworks, of course, what we saw is actually leading to a uh, trade war between China. So we might be able to see something very similar this time as well. But I think if you look at it, that will be a little more beneficial for the third world countries like us, because I mean, two superpowers fighting with each other would definitely create opportunities for small timers like us to simply expedite our export segment in terms of that. I mean, if you look at it, frankly, that will open the doors to textile sector more or less. If I give it like a simple example, so in that context, actually, another side of the story is, if you look at it, is that right now we are seeing the Russia Ukraine issue as well as the Gaza issue as well. So I think more of these war kind of a situation will slowly ease off. Reasoning the Trump administration is not interested considering these kind of issue. They are very much focus on how the economic structure works, because especially if you take Ukraine situation, Ukraine has been the main supplier for most of these uh, items in terms of let's say grains to wheat to all those stuff that is completely required for the human consumption. So those things have been put, actually try to put full stop in terms of the war has started. And same scenario in terms of if you look at it, the Gaza situation with Iran and Israel also, that will basically put a little bit of a weight to the oil prices. I think the moment that Trump won, those things have started declining from the prices what it was. So I would personally think that would be a let's say a good indication towards the cost structures and everything might slowly start coming down, because the commodity prices fall will definitely start impacting in terms of global scale itself. So if you
Uh,
come from geopolitical to Sri Lanka, now,
yeah.
I think more or less most of the investors didn't expect our AKD to win, and now the tables have turned. So clearly, if we look at it, of course, the expectation was there were three main candidates actually, and he has overtaken the office now. So with that, if you look at it, we saw a market directly started picking up. So there was initially, prior to the election, we saw the market dropping from 12,500 to 10,200. Now, after he take over the office of food, now the market has already come back to where it was. So right now, the most important question is, yes, we have a concern in terms of the majority of the parliament, like you clearly explained, Dimantha, based on those scenarios that you highlighted, even with a simple majority, they get it. And if according to what their manifesto that they have clearly mentioned, these are the things that we are aiming on doing, and these are the things that we basically want to bring it to the table. So if those things started happening, I think the foundation that the previous president and his team has laid upon towards the IMF requirements, they are currently following the same pathway. So if they do not deviate from that, if they are planning to deliver exactly as per what they have committed, I think we seriously see there is a far more room to grow in the market compared also coupling the earnings that it's
Yeah.
going to come, and I think most of it has
Okay.
already arrived.
Right. So I think what I understand is that from what you told, we are seeing uncertainties actually gradually reducing on one side with Trump coming into picture with on the geopolitical front and also on the local side, one with potentially the uh, current government gaining a majority in parliament. Potentially you will see uncertainties gradually easing off, right? So which means that to that effect, the market can re-rate as well, right, Nishantha?
Mm.
Yeah.
Absolutely. And if I
Oh,
add another statement to that demand, I think most probably with this IMF and debt restructuring also in place, we might see Sri Lanka coming out of the default also. I think that itself will basically be another advantage for our investors to see. The foreign participation will also we can expect to the FDI side as well as the market side also.
okay. Okay. Thanks, Nishantha. So we have a question in Sinhala. Let me put that to the audience. So then ඉස්සරහට පවතින අවදානමත් එක්ක යම්කිසි අවදානම් තත්ත්ව තියෙනවා බජට් එකේ එහෙම මොන වගේ බජට්ස් දායිද කියලා ඒකේ අහලා තියෙන්නේ අතරම මේ කොච්චර කරාසයක් තියෙනවද මේ ගවර්න්මන්ට් එකට ආණ්ඩුවට කොච්චර පරාසයක් තියෙනවද තමන්ට ඕන විදියට බජට් එකක් දාන්න ඒකේ යම්කිසි අවදානමක් තියෙනවද කියලා තමයි අහලා තියෙන්නේ. ඉතින් ඒ ගැන යම්කිසි දෙයක් මම කිව්වොත් ඇත්තටම කියනවා නම් අපි දැන් ඉන්නේ මේ IMF ප්‍රෝග්‍රෑම් එක. එතකොට IMF ප්‍රෝග්‍රෑම් එකක ඉන්නකොට හුඟක් වෙලාවට Tamanට ඕන විදියටම බජට්ස් දාන්න බෑ. මෙහෙමයි IMF එකෙන් කියන්නේ නැහැ අපිට මොකද්ද කරන්න ඕනේ කියලා. ඒ වුණාට හැමතිස්සෙම IMF එකෙන් ටාගට්ස් දෙනවා. එතකොට foreign reserves target එකක් දෙනවා, primary account target එකක් දෙනවා. ඇතරම් තියෙනවා නම් කියනවා නම් primary account surplus target එකක් තමයි අපිට දීලා තියෙන්නේ. එතකොට budget deficit targets තියෙනවා, inflation targets තියෙනවා. ඒ වගේ targets ගොඩක් තියෙනවා. ඒ වගේම reform targets උත් තියෙනවා. ඉතින් ඕනෑම ආණ්ඩුවකට තමන්ට ඕන විදියට බජට් දාන්න බැහැ. ඉතින් අපි කියමු ආණ්ඩුවකට අවශ්‍යයි කියලා මිනිස්සුන්ගේ බදු බර අඩු කරන්න. ඒ ගැන කතා වෙනවා නම් ඒක අඩු කරන්න ඕන නම් තව පැත්තක් හොයාගන්න ඕනේ රෙවනිව් එක වැඩි කරගන්න. කියන්නේ ආණ්ඩුවේ ආදායම වැඩි කරගන්න වෙන විදියක් හොයාගන්න ඕනේ. මොකද IMF ටාගට් එකක් තියෙනවා revenue to GDP මේ තැන තියෙන්න ඕනේ. එතකොට ඒකෙන් වෙන්නේ අපි ඇත්තටම ආයෝජකයෙක්ගේ පැත්තෙන් ගත්තොත් මේක ලොකු වාසියක් තමයි තියෙන්නේ මේ IMF ප්‍රෝග්‍රෑම් එකක් ඇතුලේ ඉන්න එක. මොකද හැමතිස්සෙම ආයෝජකයාට වාසිදායකයි. මොකද හැමතිස්සෙම රිෆෝම් ඇජෙන්ඩා එක තමයි යන්නේ. හැමතිස්සෙම මොනවා හරි ආණ්ඩුව කරන්න ඕනේ තියෙන තත්ත්වයට වඩා ඉම්ප්‍රූව් කරන්න, බජට් ඩෙෆිසිට් එක අඩු කරන්න, ෆොරින් රිසර්ව්ස් වැඩි කරන්න, රිෆෝම්ස් ගේන්න. ඉතින් ඒ පැත්තේ හැමතිස්සෙම ඉම්ප්ලිමන්ට් කරන්න ඕනේ. එතකොට කාලෙන් කාලෙට රිවිව්ස් තියෙනවා. ඒකට අනුව තමයි මුදල් ප්‍රතිපාදන හම්බ වෙන්නේ. ඉතින් හැමතිස්සෙම ඒක ලොකු වාසිදායක තත්ත්වයක් තියෙනවා ආයෝජකයෙක්ට. ඉතින් ඒක තමයි තියෙන ලොකුම ඇඩ්වාන්ටේජ් එක. ඔව් ඒක තමයි මට හිතන්නේ මට දෙන්න පුළුවන් උත්තරේ ඒක සම්බන්ධයෙන්. Yeah. So if we go to the questions by the audience again, yeah. So there's a couple of questions about the hung parliament. I'll probably take this up and answer in line with what I sort of presented. Now, what I'm telling here is, now if you have a hung parliament, still it's not too much of a problem as long as you're following the IMF program, but it's going to be slightly more difficult to implement changes. So with that, what will happen is, now what we are expecting is, they will definitely, since the numbers, most of the numbers are now getting achieved, the government will try to, in a hung parliament, the government will try to obtain or get the governance related reforms implemented. By that, you will have still the IMF program sort of on course, so you can still have it going. So still you will broadly be on track. However, you will see similar to what you have seen during the first half of this year or during second half of last year, there'll be on and off uncertainties that come in. So sometimes you think that the program is not working, and then government finally manages to implement some of the measures, and you get the IMF program again on course. So that kind of movement here and there will be there. So you will have volatility in interest rates, you will have volatility in the stock market. However, you will have a continuous growth path, but because of the volatilities, it will be much slower than anticipated, right? But still, we think it's positive for the equity markets, because interest rates are, as long as it's below the 13% mark, we think there will be push towards investors or push towards looking at alternative investment options. So that is the advantage there. Yeah, let me go into another question. I'll go to Nishantha for this. Nishantha, we have a question from the audience. It's related to elections, and so the question is, what are the good shares you advise to buy tomorrow? That is 13th of November. I think it's targeting the election. Just so what he's asking is just before the election and just after the election. So I don't know whether there should be a difference or not, Nishant. So you can take it up. What kind of stocks we should go into?
Dimantha, yeah, if I clearly say out loud, it's not only exactly whether it's before the election or it's after the election. We as First Capital has been very straightforward about what sort of a stocks we have been recommending, and I think it is nothing to do with actually post-election, after-election kind of a segregation. I think the most important thing what to look at is actually what are the sectors and how strong these companies are in terms of navigating difficult times. So if you look at in that kind of a ground rule, I think mainly if you look at it, the current banking sector, it has been dominating almost for the last consecutive 8 weeks, if I may put it, started from uh, the presidential election day itself. Soon after that, it has been dominating. So that is a very clear, clean-cut signal. Actually, the country's economic structure is getting better, and while it is happening, the more weight is basically coming towards the banking sector related stocks. So that itself is actually a proper indication to see once the economy started recovering. I think that itself will start trickling down to most of the other sectors actually, which has the potential and the room to grow. And especially if you look at it, the tourism, uh, which is basically one of the key sectors that uh, attracting the US dollars itself. So most of the hotels, even at boutique hotels, if you look at most of the people who are in the tourism industry was affected due to the COVID. After that, the economic crisis. So all these things actually have been affecting most of these people. I think that's one of the next sectors that we may see developing along with this. So just like that, if you look at it, I mean, most of the shares which are undervalued and which has the room to grow, if I start individualizing them, of course, it'll take almost the rest of the evening for us to explain individually one by one. But at the same time, Dimantha, I think we have published most of our recommendation list along with the target prices, along with where do we see those numbers and forecast as well. So
Correct, correct.
I think that
Let
that
me
would answer
let me
the question.
Yes, let me add on to what Nishantha said. Yes, so investors, I think banking and tourism are the key topics for First Capital, and then of course others are on the recovery story after that. So we are looking at also the consumer sector as well. Things like maybe Ceylon cold stores, maybe Hemas, maybe then also um, some things for investors where, as Nishanta said, there's the positive side in the global side also happening with the picking up, potential pickup in the US side. We are also looking at the export sector. So, but clearly, banking leads the way, I think. Heavily undervalued, a lot more upside in the market because simply because I think it has been having continuous hits from 2019 onwards. I think it has got significantly undervalued. That's why I think one of the reasons that it's having so much of potential and has been one of the top picks of the investors as well. And we, as Nishant said, I think investors will continue to take that up as one of the top picks. Also, remember these stocks are heavily liquid as well. So as the rating upgrade comes in with economy opening up for foreigners, you may see foreign investments also coming in other than the blue chip stocks. So banking sector is one of the key stocks that foreigners may come into. So that's another key thing to look out for. Yeah.
So Dimantha,
So
if I add another extra line for that, I think declining interest rate itself is also another boost to actually another injection to the trend lines as well as those prices, because I think it's actually coming to the single digit now. So with that, most of the funds that is currently in the fixed income also, there is a 90% to 100% probability that will slowly start shifting towards equities. So
yeah, yeah.
that it's also another good point to look.
Also, Nishantha, I think there's another question related to now the market has been moving up on a continuous basis. Now, some of the investors have this, they think that the question is what they're asking is almost all stocks are up. So, what are the more profitable sectors in the near future? So I don't think most of these things have come to their full potential. So Nishant, if you can give us an explanation as an investment advisor on your side of things as to what can you tell to these investors? Where some of they think that everything, yes, correct, everything has moved up, but do we need to look at outside of what we are telling as well? Yeah.
Dimantha, very frankly, if we look at it, prior to the election, the market index was around 12,500, 12,600 levels, and it actually fell down to 10,200. If you look at it very clearly, when we publish our reports, which is technically, if I'm not mistaken, somewhere close to March, April towards this 2024. So at that point, market index was somewhere around close to what we are right now. So what we are looking at is actually a recorrection from where it dropped. So the clarity you have to bring it to the table is actually right now you are looking at certain prices which decline due to the market volatility and the fluctuation, and it came down due to the uncertainty of the presidential election. And now it has come to a level when you look at it, you might think now the market has already gone up. Actually, in terms of uh, look at the points where the market dropped versus market where market was. So technically, it might have gone up by let's say 10 to 15%. At the same time, all you need to understand is actually from the current level, like you clearly mentioned, you're targeting 13,500, which is literally knocking on the door, and 15,000 index, which is significant amount that needs to be taken to consideration. So, in that grounds, if you look at it, all the shares, whatever the shares that you're planning on investing, as per the First Capital recommendations that where we have given the target prices, I'm pretty sure actually we are looking at another 30-40% capital gain. It's already there in price. But at the same time, you need to understand there is another hidden component. If these banking shares to manufacturing to tourism, all these ones, what we are recommending, there will be dividend payout as well. So that is actually a additional bonus that you might get on the way. So I mean, I don't think we need to be critical about it or rather scared, too scared about where the prices are right now. All you need to understand is actually where it can go, where it could be. Because, but I have to be very blunt about the next statement. By thinking the entire policies, whatever that the current president and his team who's going to get elected after the 14th, and they are going to follow the same principle and the ideology that it's currently running. So, so you have to simply go with path because I mean, if they do certain changes, I don't think neither Dimantha or myself can uh, just comment about any of these things because that means they are deviating from what it should happen. So, so
Yes.
uncertainty is always there.
Yeah, so as long as I think we are in the IMF program, I think that's the advantage that the investors have also. So as long as the IMF program is followed, I think the risk levels are, I think, pretty low, right?
Yes, I don't
Um,
think they can actually, in my personal opinion, I don't think they can deviate from that also. Even if they do, of
yes.
course, I think the downfall will be catastrophic.
Yes, and also it won't take long like previous times for the downfall as well. We will see it
Exactly.
pretty quickly because we are just coming out of a crisis. We're not really out of it as yet as well, right? So, leaving that, I think we'll go into the next question. So, I will put this question also to Nishantha. It's about the tourism tech sector that he was most positively talking about. There's a question, Nishant, on what are the good companies in the tourism sector? So if you can give a few key highlights that you think uh, are potential that we can have the investors out.
Okay. Yes, Dimantha. Now, if I look into tourism, and if I look start recommending in tourism area, it's more or less going to be the hotels, the sector. So, if I look at the hotel sector, and if I started commenting about it, the very first question that I would have to expect most of these hotels that you are currently recommending is not doing too well in the results, whatever that has been out. So the reason for that is actually, I think Sri Lanka is basically not in the season on the September quarter. I think the season starts from the September quarter. So we are seeing the results that is already factored is actually the quarter that is in terms of Sri Lanka. It's actually a sleeping kind of a area we see in terms of tourism I'm talking about. So that would be the case if we look at the numbers, because since we have been talking about the numbers and performance, of course, I wanted to bring that upfront prior to I started recommending anything because I think that will clear the issue that might somebody might have. So in terms of tourism and in terms of hotels demand, I think we have clearly taken John Keys Hotels to Cinnamon HPL to and specific Ahungal to. I think most of the key players and who are sizable enough to absorb and even navigate through these kind of turbulence. Of course, I think those are the main hotels that we have, as First Capital, we have recommended. And
Yeah,
also, most of these hotels are actually very much liquid. So, and exposure towards the hotel sector, and it is backed by a very serious group, I would say. So the rights issue requirements are also very much less in terms of these hotels. If you look at it, I think they have the enough working capital. If you look at those 3 hotels that I have already recommended, of course, in terms of that. So I mean, honestly, there are so many hotels in the country that you can look at it now. Even if you,
Yes.
even if I come right next to Kolpiti, there is a sleeping giant kind of a hotel called Renuka. So their numbers are really good. The, I think they are very asset rich, and they have quite a decent amount of cash per share. To look at it, all these numbers are there. But I mean, if you are getting into tourism, if you are getting into hotels, you should be able to hold it without upsetting the balances, because these are cyclical shares in terms of their performance. There is a season, there is a off season. So off season, you cannot expect phenomenal outcome, but on the season, you definitely can. Saying that, but I would like to highlight another two segments actually. John Key is coming out with John Key's new cinnamon light, the new their
Yes.
new innovation baby kind of a thing. So if you look at it actually, and also Shangri-La. Now in terms of hotel industry, Shangri-La is actually a name that everyone knows. So that if there is a hotel called Shangri-La in a city, that means it automatically becomes actually a city to look at. Those are those are pioneer brands in the global scale. So technically that means actually Colombo will be a segment that most of the foreigners will definitely look at, even to visit, even to be there, because Shangri-La's presence in Colombo will definitely highlight the security and also the classiness of the country, and whether is it safe to travel. All those things will be considered actually, because those kind of brands will not come to a country and will like with their brand name unless they are very certain about what they are doing is right. So, so those kind of indications will definitely give us a very strong background to look at the hotel sector as well. So,
Yeah.
I mean,
Yeah. So let me also add on something onto that. I think Nishant accurately mentioned that three main hotels. So HPL, Ahon. I think we have many hotels in our recommendations. But in terms of these three hotels, HPL, Ahon, and Keels hotels, our top picks also topics out of the many recommendations that we have. So, uh, I think why they are topics also is because yes, there's a large number of rooms, and all these hotels will have a obviously a fixed cost element. And what you'll see is now this is, I think, the yeah. So Nishant also mentioned that the off peak and the peak season, and if you take the peak season, this is probably the first full-blown quarter that we are going to see excessively high demand in terms of tourism, right? Which is comparable possibly to the 2018 season. So that's why I think those three hotels becomes our top picks, because as soon as it goes above your fixed cost, everything else, bulk of it goes straight away into the bottom line as profitability. So in addition to that, of course, there's a number of other hotels as well. So I will not delve into those. I think Nishanta just mentioned one, but there's more, I think, that we can name and put in. As a sector, we are very bullish on this sector, and we think as the market re-rates, even this sector will re-rate. It hasn't moved for a while because it has been in the off season, but you have already seen what the first few days numbers of November tourist arrivals is. I think in the first few 5 or 6 days, we've seen about 30,000 tourist arrivals coming in. So a massive acceleration is being seen. So with that, even the small hotels what you will start to see is their ARR starting to increase. ARR means the average room rates. So it's easier to fill the smaller hotels, but you will see the average room rates starting to increase. So with that, you will have a gain in those hotels as well. So there is a question asking about any Colombo hotels. I think Nishantha already answered that, stating that Asian hotels, even he mentioned a small hotel, Renuka also. So those are things, some of the things that you can look at. Then we have a question on capital gains tax. I think globally, of course, capital gains tax is just 10% globally, and in Sri Lanka, we don't have capital gains tax. I'll put this question on to Nishant. What if capital gains tax is introduced? The question, Nishant, is will the market decline? Is that,
Dimantha,
yeah,
it probability is actually now initially, if we look at short selling introduction, and most of these tax components and introductions were seen. But if we take it very clearly, I think when it comes to these short sale capital gain tax introductions, you need the infrastructure. I don't think right now we may have the proper infrastructure to exactly calculate and verify and all that in terms of the systematic side of it. They might be able to definitely ask the auditors to do it one by one calculation. I mean, it's going to be a too much of complex kind of a issue. I think even increasing the government cess will definitely have a better impact than that. If you increase the transaction levy on the set, that will be basically for each transaction. Whether you make money or lose money, that's government is going to get it. So all you need to understand actually in terms of capital gain tax, it happens only actually if you realistically gain the tax, and if it can be presented, then okay, these capital gains have been made through CSE transactions. So, in my opinion, of course, I think they will not go for that kind of a option. I think the highway is going to be increasing the cess and basically getting the bulk of it then and there rather than just going into too much of a hassle. So, I mean,
yeah.
I could be
I
wrong.
think,
I could be wrong.
yeah, I think they've introduced our transaction costs are also onto the high side, and there is already taxation in the transaction cost. So, because of that, implementing capital gains tax might not be the way forward. However, even if it's introduced, as Nishant pointed out, it might be less effective rather than directly increasing the cess. So something like that. Also, even if it's introduced, I think we already have it in government securities. It's not really a significant impact because it's just 10%. You retain 90, and it's not coming out of your cost or anything. You have to make money to pay your taxation, and it's not like your personal tax of 36%. This is just going to be, this is just 10%. And on the market side of things, I think broadly what we need to look at is, though could be a temporary hedge, what we need to broadly look at is the valuations of the market. And as long as valuations are attractive, you should simply go into it and buy, because you can take advantage of it. So let's go into the next question. And I think we've answered a lot of questions. This will have to be our last question, I think. So it's about the NBFI sector, and I will sort of take it up. So the question is, how do you see the NBFI tech sector? Any NBFI counters that you would suggest to look at? So NBFI sector is something that we are bullish on as well. However, we are not, we haven't promoted it too much because there's so much upside in the banking sector, and the undervaluations of the banking sector is far greater than the NBFI sector. However, valuations of the NBFI sector uh, are also somewhat attractive, and also taking into consideration the opening up of the vehicle imports, I think is also going to add a critical advantage to these companies, because primarily most of them are the lending books are 90-95% into the vehicle leasing and lending business. So with that, definitely, we think that sector will start to grow, lending, loan books will start to grow, and that sector will start to get revived again. And we think it's pretty attractive, and broadly the sector is, I think, trading at still at around 0.6 times book. And so overall sector is attractive, and but we are broadly positive on the bigger uh, companies such as LOFC, People's Leasing, maybe um, LB Finance, Valbiel Finance, maybe commercial credit. These are some things that you can basically look at. Yeah, so I think that answers that question. And however, we need to apologize our investors because we've had uh, uh, we've answered a lot of questions, and it has come to a time where we need to wrap up things. Let me first thank the audience for taking our time and coming for this forum, and also for Nishantha for contributing for this forum, and providing his advice for the investors. And so hope to see you in 2 more weeks with our seventh edition of Stock Talk. And until then, it's goodbye from us.